It didn't happen in a single day or with a single signature. It happened through decades of belief. Belief that markets were wiser than people, that efficiency was virtue, that government itself was a burden. While flags still waved and campaign songs promised renewal, ownership was quietly rewritten. The republic that once built railways, dams, and schools by collective will began to sell its own reflection, piece by piece, to those who claimed to serve it. The sale was not forced. It was celebrated, and faith, not fear, made it possible. In 1981, Ronald Reagan stepped before the nation and delivered a line that would echo for generations. Government is not the solution to our problem. Government is the problem. It was more than rhetoric. It was a reformation of American purpose. Taxes were cut, public agencies trimmed, oversight loosened, deregulation became gospel, and debt, once an enemy, was baptized as a tool of growth. Corporate boardrooms heard a hymn of liberation. Utilities, airlines, and defense contracts that had long served the public were invited into private hands under banners of innovation and competition. To a nation weary from inflation and foreign humiliation, the promise felt pure: let the market heal what politics had broken. The first dividends looked miraculous: a surging stock market, new wealth, cheap credit. But underneath, something foundational was shifting. The public stopped building for itself. Instead, it began to rent its future from those who could monetize it. By the late 1980s, privatization was no longer an experiment. It was a fashion. Telecommunications, infrastructure, even prisons entered the marketplace. Reagan's successors, regardless of party, kept the wheel turning. Reform became the code word for transfer. Each sale reduced the visible size of government, but enlarged the invisible reach of capital. The engine behind this transformation was belief. The belief that markets are moral, that profit reveals the truth, that competition cleanses corruption. Under that light, the line between civic duty and self-interest blurred until it vanished. Economists spoke of trickle-down. Politicians promised that wealth, once free from restraint, would lift all boats. Yet each reform tilted the tide. Productivity rose, wages did not. The tools once meant to build society, credit, debt, ownership, became mechanisms of quiet control. Freedom was recast as the ability to buy. Citizens were rebranded as consumers, and virtue measured not in contribution, but in consumption. Every purchase, every stock trade, every swipe of plastic became an act of faith, proof that the system worked because it kept turning. Imagine a nation painted in gold light, office towers gleaming like cathedrals of progress. Behind their glass, the hum of terminals replaces the rhythm of hammers. Public workers fade into silhouettes. Traders glow like saints. Bridges once built by citizens now carry tolls paid to shareholders. Television screens preach abundance, while factories fall silent in the Midwest dusk. The palette shifts from warm amber to cold blue. The wealth feels divine, but distant, an idol seen through glass. Every act of privatization is framed as efficiency, yet each one erodes a thread of common purpose. By the decade's end, the nation looks richer on paper and poorer in soul. No empire ever sells itself believing it will fall. It sells itself believing it has discovered a higher law, that markets, left alone, will perfect what men could not. But faith without accountability is not freedom. It is surrender disguised as progress, and as the century turned, America stood proud in its new prosperity, unaware that it had mortgaged its sovereignty to the very system it thought it controlled. The contracts were signed, the faith was sealed, and the ripple had only begun. It wasn't a coup with soldiers. It was a coup with signatures. No parades, no gunfire, no flags raised at dawn, only contracts signed in silence, lobbyists walking polished marble halls, and checks written in the language of influence. Through the 1990s, a quiet transaction unfolded, not between nations, but between power and profit. Washington learned to speak a new dialect, one spoken in donations, campaign finance, and corporate favors disguised as policy. The invisible hand was no longer guiding the market, it was writing the laws. Money, once a shadow behind politics, stepped fully into the light. Lobbying became a profession, not a scandal. For every elected official, a dozen consultants stood ready to translate public duty into corporate advantage. Campaigns evolved into investments, and those who funded them expected returns. Democracy became a marketplace of influence. Its currency, no longer trust, but capital. The same banks and firms once humbled by Depression-era restraint now dictated the terms of their own freedom. The walls built after 1929, Glass-Steagall among them, were no longer seen as protections, but as obstacles. When those walls came down in 1999, the bankers didn't cheer in public. They didn't have to. Their applause was written into the stock tickers. The repeal was called modernization, a victory for efficiency. But in truth, it was a surrender, a declaration that regulation itself was outdated, that the pursuit of profit was the highest form of progress. Commercial banks merged with investment giants, creating entities too vast to fail and too powerful to question. The line between the government's treasury and the financiers' ledgers blurred until they shared the same handwriting. Each crisis, each bailout, each revolving appointment deepened the bond. The regulators became the regulated, the overseers became the shareholders. In this new order, ideology mattered less than access. Republicans and Democrats traded control but not direction. The compass pointed toward Wall Street, no matter who steered. The economic faith of the 1980s had evolved into political dependence, a partnership where the market's will defined the nation's agenda. Public interest was no longer measured in welfare or wages, but in investor confidence. When the markets trembled, presidents spoke of national emergencies. When citizens struggled, they were told to retrain, refinance, or reimagine. By the dawn of the new millennium, America had entered a gilded age of data and debt. .com valuations soared, speculation became the national sport. The Nasdaq was treated like a heartbeat, its rhythm synonymous with health. Yet beneath the surface, the arteries were clogged with leverage. The dream of ownership was replaced by the illusion of participation. Everyone could buy stocks, everyone could invest, everyone could win, until they couldn't. Behind the scenes, the same architects of deregulation insured their risks, packaged their debts, and prepared their exits. The power once defined by votes now lived in balance sheets. Laws were no longer written to govern behavior. They were written to guarantee returns. A company could collapse entire communities with a decision made in a conference room. And when the damage came, the costs were socialized while the profits remained private. The true conquest of Washington required no invasion. It required patience, donations, and belief. Belief that money equaled merit, and that prosperity at the top would eventually bless the bottom. Picture a marble corridor lit in sterile white, briefcases passing like relics, pens clicking in approval. Behind those doors, democracy contracts itself to bidders unseen. Outside, the citizen waits in line, holding a vote worth less than a lobbyist's lunch. On paper, the republic still stands, its monuments polished, its anthem unchanged. But the soul of governance has been refinanced. The state, once built to serve its people, now leases itself to capital. Every election becomes a negotiation, every policy a product, and through it all, the illusion of choice remains. The slogans change, the colors shift, the debates rage, but the donor lists stay the same. Washington no longer writes history, it underwrites it. And the quiet coup, the one fought with signatures instead of swords, marches on unseen. Because the new conquerors wear no uniforms, swear no oaths, and raise no flags, they simply own them, and the ripple deepens. It began as a promise that privatization would make the nation stronger, freer, more efficient. But every promise has a price, and this one came due quietly. By the early 2000s, America had already sold most of what once defined its public strength. Its railways and airlines, its prisons and schools, even its water systems, all carried the fingerprints of private ownership. The invisible hand was now a fist that collected rent. The old social contract, that citizens and state shared both risk and reward, had been rewritten. Risk became public, reward became private. Healthcare turned into an industry of billing codes and denial letters. Education became a loan rather than a right. The dream of owning a home was transformed into a lifetime of mortgage servitude. The middle class, once the backbone of democracy, became a market segment, quantified and targeted. Where there had once been civic pride, there was now consumer choice. The republic no longer spoke the language of we, only of me. The data age promised empowerment, yet with every click, more of the citizen was converted into a product. Algorithms replaced town halls. Attention became a commodity. Even the act of dissent was monetized, packaged as engagement. In this new economy, truth competed for ad revenue, and outrage became more profitable than understanding. Wall Street hadn't just bought Washington, it had bought the narrative of the nation itself. When the financial crisis struck in 2008, the illusion cracked for a moment. The same markets that preached self-reliance ran to the state for rescue. Trillions were printed, debts absorbed, lifelines thrown to those who had built the storm. Ordinary citizens lost homes, pensions, faith, but the architecture of power remained intact. The coup was held. The contracts endured. The sell-off had become irreversible. not because it could not be undone, but because too few still remembered that it had ever begun. And so America entered the 21st century not as a nation of owners, but as a nation of subscribers, renting everything from software to shelter, paying monthly to access what once belonged to all. The new patriots did not build, they branded. The new revolutionaries did not march, they monetized. The land of the free was now leased at variable interest. Yet somewhere, beyond the noise of markets and media, the question remains, what is the value of a society that measures everything but treasures nothing it cannot sell? The answer will not come from policy or profit. It will come from memory, from those who still remember that freedom was never meant to be efficient, that progress without purpose is just motion. If you've listened this far, it means you still believe that stories matter, that understanding the past is the first step toward reclaiming the future. We build these films not for algorithms, but for minds that refuse to forget. So if this message resonates, if you see the ripple and know it's real, help it reach others. Like this video, share it, and subscribe to Financial Ripples, where history is not entertainment, it's evidence. Because every empire ends the way it begins, with belief. And belief, once questioned, can ripple into change.